105.7 Highlands Light FM. Good morning and hello. I appreciate you being here. We're at 62 outside. We'll see 70 or so for today. Friday morning is going to be nippy, but again, for the chili cook-off on Saturday, we'll start out a little nippy and then get up into the 60s by the time you're sampling chili. We're at 8:42 now.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
And good morning. Welcome to a look at finances as to what's going on Wall Street this morning. Yesterday, not pleasant, but then again, coming off a couple of all-time highs. You almost understand some profit-taking. Plus, we got some good inflation news on the current month yesterday, and that's not necessarily good news for folks looking for interest rate decreases from the Fed. On the phone, we have Philip Statler from Statler Financial Services, who I think I gave you enough time to be able to get things going on the recording, didn't I, Philip?
Yes, sir. You sure did. Doing good. Good to be here halfway through the week. But I wish the numbers were better from yesterday, Dave, because we just ended up the day in red ink across the board. Obviously, the Dow took it harder than I think any of the other indexes, but it definitely all red.
Yeah, it didn't help that J.P. Morgan had one of those iffy reports that came out. Plus, like we were saying before we went on the air, and I said as well, after a couple, 3 record high days, you do kind of need to back off a little and take some profits. You add the fact that the current inflation information that we got yesterday showed at the very least that we're moderating and not getting worse, and that's always good news for the economy. But then again, it makes all the short-term investors say, uh-oh, as far as an interest rate decrease in a couple of weeks in the Federal Reserve meets. So it kind of pushed everything down a little bit and took some money off the table, didn't it?
It did. At least that's what it seems to be happening, and it looks like that might even be continuing into today.
Well, we can deal with a little profit taking as long as we don't have indicators of a bear market. Of course, it is messing with the brains on some of the commodities with the upset going on in Iran and President Trump making noises about, well, maybe we'll just bomb the crud out of them over there and help the demonstrators in Iran. We've got too many hot spots around the world these days, and it's making investors nervous. The thing that I find interesting is you and I have always kind of gotten a giggle out of when the amateurs pour in, you know you're in trouble. My fear and greed index that measures amateur investment reaction, it moved into greed as of yesterday, just in time to have the market go down. That fear of missing out syndrome seems to happen every doggone time, doesn't it?
It does, Dave, and that's the thing. You know, people are afraid they're going to miss out, and they do it at the top of the market, and then they don't miss out. They end up losing money a lot of times.
Absolutely. The point for all of us amateurs, we don't have the research budgets the big money guys do. Getting in at the top doesn't ever seem to be the smartest decision possible. We start the morning out with some ancient history and some, for both, as a matter of fact, retail sales in the nation back in November. And you and I were both giggling about this. We can get current inflation numbers on the CPI, but we get November numbers a month old as far as retail sales. It was up better than we expected. They were expecting 0.4% increase in November. We got 0.6% increase. That augurs well for the final numbers that we get out of the holiday shopping season, doesn't it?
Well, it does. That's November, so I'm excited to see what December actually looks like when it comes about. So that was good news. Even good news when you take retail minus autos. Dave, for November, it was up 0.5% versus the 0.3 as expected. So I think when we look at the retail sales numbers, at least for November, heading into the Christmas season, it looks like the consumer was again resilient, as some of the banks were saying in their reports.
Yeah, we're burning plastic like it's going out of style because the rest of the macros don't look quite as good. Producer inflation during the month of November, and again, this is ancient history in the context of something where things have a tendency to turn on a dime. They were expecting the core, that's without autos, to be on the order of, what, 0.3%? We got 0.5% inflation on the core, on the wholesale inflation rate. Not exactly what they had in mind.
I don't have actually, Dave. I think everybody gave up on expected. All I have is what October was compared to November. If we look at that, the core PPI for the month of October was up 0.7. Month of November, it was only up 0.2. So that sounds really good. But you start to look at the year over year numbers, a little different situation there. The PPI year over year for the month of October was 2.8%. Now it's 3%. And if we look at the core PPI, it's gone from 3.4% in October to 3.5% in November. So it would be nice to see December's numbers start to fade a little bit.
Yeah, we kind of need the producer price for December, then the November number, then the December numbers to kind of mirror what we got out of the consumer price index. That would help by a ton. I'm getting confused which month we're talking about while we're doing catch up in the government. I think I can be excused for that as taking them for flipping ever. So we got some news that may very well not help our expectations for an interest rate decrease happen, but at the same time, we've got some encouraging news for consumer behavior to start the morning out. A bunch of tidbits going on before we get to the earnings reports. Somebody finally read the memo that the companies are spending too much money on artificial intelligence. The Meta people announced this morning, that's the Facebook goons, said they're laying off 10% of their Reality Labs staff. Maybe some of the artificial intelligence expenditures are starting to look like they are turning a living for them, isn't it?
Yeah, I mean I find that interesting that we're starting to see some layoffs there. Mortgage refinance, Dave, demand surged like 40% last week, based on Trump's announcement last week. It did drive interest rates down a little bit, so we saw a big refinance push last week, and even applications for purchase of a new homes increased by 16% for the week.
Wow. I'd gotten the headline on Monday that the prevailing mortgage rate had finally dipped below 6% for a 30-year mortgage. That little bit of a psychological barrier made a difference, didn't it?
Yeah, it did. And let's talk about another house. Well, I don't want to say household name, but definitely a staple within our country when it comes to retail. And that's Saks Fifth Avenue and the holding company, Saks Global, who owns like Neiman Marcus, Lord & Taylor's. They filed bankruptcy.
I knew they were heading in that direction. I didn't hear they'd actually filed.
Filed Chapter 11 yesterday. Yes, sir.
The idea of a high-end chain like that going under, that's kind of indicates the fact that even the high-end consumers are economizing, doesn't it?
Well, for them, it was I think they just mismanaged some stuff. They went in and bought Neiman Marcus in 2024. I think they probably paid too much. It was like $2.4 billion. And they were already having cash flow issues before they did that. I think it was just some bad management, really, myself.
Pay too much, you end up paying the piper at the end of it all. Earnings season is getting underway, and we had a kind of an iffy report out of Morgan yesterday. Have we got something to make us feel good about the financial sector this morning?
Well, let's look at the three banks that I have this morning. That's Wells Fargo, Bank of America, and Citigroup. Start with Wells Fargo. They had weaker than expected revenue for the fourth quarter. And so top line missed by about, let's just say, about $1/3 billion. Interest income came in below expectations as well. I don't have what their net actually earnings per share was. It didn't. My report's a little sketchy this morning, but down 2.5% this morning based on that.
And that was after the government told them they could go ahead and grow again last quarter.
Yes, it was after they were told they could start growing again. Citibank, they had a good quarter as well. Let me get my more detailed report here. They earned $1.81 a share versus $1.67 expected. Revenue came in higher than expected. Their net income did fall by 13% as far as year over year. So that doesn't seem to be affecting them much this morning. They're up about 1.3%.
That surprises me, given the fact that they're as heavy into credit cards, and with the iffiness on credit card rates going out, I figured they might not be the baby on Wall Street everybody loved this morning.
Yeah, well, Bank of America, net interest income rose 9.7%. Their profit rose 12% year over year, which they kind of did the opposite there. They beat by 2 cents a share, came in at 98 cents a share, beat on revenue as well. However, right now they are trading down 1.5%.
Whoa!
Yeah, not sure why.
Have you got any good news this morning?
So let's just see what I can find here. I was looking. That's really all the main things I have.
The other reports I saw weren't household names, I know.
Yeah, I mean, I got Netflix. It's not really earnings based. It's talked about their, purchase of Warner Brothers, Discovery and HBO Max. Based on them putting together their deal, they're trading up 1.3% this morning. Everything else is in the toilet.
Speaking of which, let's set the table for the morning then. Profit-taking day, everything pretty much red yesterday. 45 minutes before we opened this morning, what are we looking at?
A lot of red ink on the index side, Dave. We got the Dow down another 1/3%. The S&P 500 is down not quite 0.5%. And the NASDAQ 100 is down about 0.6%. So good, all red numbers. On the other side, Dave, are the Bass brothers back in business? I mean, I'm looking at silver, Dave, up 6.3% this morning, crossed over 90. It's at $91.82 an ounce. Can you believe that?
Crud. I was saying the other day, I remember when I was wondering if it'd ever get above 20 again.
Gold's up 1% this morning. Unfortunately, crude oil's following the game. It's up about almost 0.7 to $61.56 a barrel right now.
And that they're saying primarily is nerves over Iran, because they do sell a chunk of their oil. Yeah, that's not helping the confidence one tiny little bit. Looking across the ponds, the Asian Rim almost universally happy this morning. Chinese indexes were somewhat split. One was up by about 0.5%, the other down by 1/3%. Everybody else pretty much had party time yesterday, green ink in Asia. Europe is almost dead flat this morning on balance, but it's based on some ups and downs. UK markets are up by 0.25%. The German market, on the other hand, is off by 0.5%. Net, we're basically flat as a pancake over in Europe on balance across the community. Getting my retirement plans together takes some advice. Get the risk out probably is the first bit of advice. How do I find you to get advice so I can do that, sir?
Dave, it's the first of the year. It's a great time to make sure that your retirement plan is working in your best interest. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM. You can also go to our website at statlerfinancial.com and watch any of these reruns they want to watch, Dave.
And we can also broadcast it live on the web on News Talk, on newstalk730am.com. By gosh, you are absolutely everywhere, aren't you?
We work on it. We work hard.
Have a good day. We'll catch you tomorrow, sir.
All right, man. Talk to you later. Folks, again, I want to thank you for joining us today. Hope your week has gone well. I look forward to speaking to you again tomorrow. Take care. Bye now.